Okay, say, I heard you coming, so I went ahead and started the video. All right, everybody is here, and the book situation. Jessica just said she rented hers for $70, and the cost of this little old book, I don't think it's worth 300 some dollars. One semester course. Now there are cost accounting books that you can make 2 semester courses out of. Here we don't. So she's paying $70 from where?
Chegg.
Where?
Chegg. It was like $74.99 to rent it till the end of May.
Okay, you going to the same place, say?
Yeah, we'll do that.
Yeah,
Now, what were you able to get a used cost accounting book at?
probably Amazon.
I got mine on the check.
What you have to, you rented or buy?
Renting.
And you had to pay what?
Trying to remember.
I think-
You
I was gonna say it had to be the 70 something.
know, I think it was that expensive when I rented.
Okay, how about you, William? Are you looking at the same site?
Oh no, I rented mine off Cengage. Sorry,
You rented yours off what?
Cengage. I
Cengage.
rented another book off of Chegg.
Okay. All right, there's a couple different sources then. Try to go the cheapest route. Uh, our bookstore, it's not owned by the college anyway, is it?
Not
Uh,
anymore.
bookstores offer good service, but I believe in competition. I believe in getting it as cheap as you can, wherever you can. Uh, back in the day, I bought a Subaru. My brother in Michigan worked at Chrysler. But back in the day when Chrysler and General Motors and Ford was having a little bit of economic trouble, you didn't want to drive a foreign car, a Toyota or a Nissan or a Subaru around Detroit. You parked it, might get beat up overnight or stolen from your yard. Even repair shops wouldn't even work on your vehicle. They were trying to protect the big three. But I told my brother then,
I'm gonna change your mind, get it off the check. I got mine for $40.
40
No, mine was
bucks?
63.
Yeah.
Nine.
So you got yours 63.
Yeah.
You got yours 40. What's your quote say?
I'm gonna do what he does. I haven't looked at it yet.
40 is a pretty good deal then. That
I
seems,
just know if I have problems, I have a Cengage account
yeah.
and I can contact them. So that's the reason I get mine off in here.
Sometimes people pay more for peace of mind. That's why we buy warranties. All right. Forget about chapter one. It was a lot of terminology, introductory comparison of financial accounting to cost accounting. Might be a few relevant terms there, but we won't worry about them. You don't even have to read it. It will not be on a test. Uh, this chapter, though, we've got to look at cost. All right, we've got different costs over here, direct and indirect. Some of it can be traceable, some of it non-traceable, indirect. And here we have variable and fixed and mixed. And on the financial statement, unexpired, expired, you know what those mean. Product, you know what prime cost or conversion cost is? You might not yet. If you're at managerial, you do, but you will get to these different terms. And this chapter has a lot of them in it, so it's an important chapter. The cost object is anything for which management wants to collect or accumulate cost. You want to collect or accumulate cost. If you're building a widget, you want to accumulate cost for that widget. Reaction to change in activity, classification, or financial statement. You know, a lot of your books use widgets and gadgets as a product, but I had a student one semester actually brought a widget to class. Some company was making widgets, really widgets. I forget what it was. It was a no-nonsense item, though. I mean, it was a nonsense item. Direct costs we can trace to the audit. Now, if we were building this table, what are some direct costs we could trace to making this table? The wood, the metal, well, sure has the cloth, but the table has wood and metal, that's about all I see. And maybe this is some kind of plastic that we trace, but that's the cost. Materials is a cost. The person on a product line or whatever, assembly line, working on this table can be traced. Okay? But the electricity for the whole factory, we can't trace what part goes to this table. So it's an indirect cost. All right? So it's treated as overhead, the indirect cost is. And we can try to allocate it by different methods later. Now, we will have to work on separate mixed costs, but variable and fixed, you've had that so much, you know what it is. What's usually some of your fixed costs for even a retail business, or any business, what's the fixed cost?
Rent.
The rent or depreciation if you own. Depreciation is fixed if it's straight line, if it's units of production, or double decline balance, it's not fixed. It's variable. In your household expenses, what household expenses? So none of you are married. Okay? Jessica, you still live at home or on your own?
At home for now.
What?
At home for now.
Yeah. So nobody lives on their own. But some of your parents' fixed expenses might be rent on their house or apartment or whatever. If you're on a budget, your electricity can be fixed. The electricity is still mixed. You're going to pay so much no matter what. Your water bill may be mixed. But now your cell phone bill is pretty much fixed now, isn't it? I guess they got so many packages for data. There's not such a thing as going over data. When I'm out of data, I have slow data instead of fast data. They don't charge me anymore for data. Does anybody have Verizon?
Yeah.
Now, how much data do you all get? 2 gigs or?
I have unlimited.
Now, I started to ask you, what do you pay for the unlimited?
For 3 phones, altogether unlimited, is almost 200.
But that's for the phones.
That's for the
And the
phones
data.
and the data.
Phones are expensive. That don't include the cost for any of the phones.
No.
That's just for certain. But you know, I never thought I'd see the day where phone bills are $200 or $300.
It's like 155 for the plan, is what it is, and then taxes and fees and.
33 years ago, I built a house out in the country, and I had an old country TV cable out there. It's $14.95 a month. I may have gotten 10, which was good. But you know, then Spectrum took it over, Time Warner, then Spectrum. Now my TV's all of a sudden $200 a month. But that includes internet and telephone, but still a lot. And back in the day, telephone companies had a monopoly. I think I had Bell Telephone or something like that, or some kind of telephone company. It's only one. But then came cell phone, and then came all these phone services through the internet and through the wires or what have you. It's not a monopoly anymore. TV cable is still pretty much a monopoly unless you get Dish or Direct. Okay, so we'll be looking at these costs. Now, your all's variable cost, you know your tuition's pretty much a fixed cost. Well, we just saw that books are a variable cost. Because each of you get even just one book at different prices. If you bought the thing, it cost you 300 and some. Uh, okay, so variable cost, we'll be looking at that. Now, total and unit cost behavior. Variable cost varies in direct proportion to change in activity. I don't know how to state that, and I don't know if I can write here or not. Some of my PowerPoints let me write, and some of them do not. This one will. All right. Now, this says varies in direct proportion to change in activity. If materials are $2 a unit and you use 1,000 units of materials, what's your materials cost? 1,000 units times $2 a unit is how much? 2,000. That's variable. Now, if I use 3,000 units of materials at $2, that'd be how much? You know, you get this confused sometimes. This is variable, but you think it's fixed because it's $2. No, it's $2 a unit. It's the units that's variable. All right. Now, the fixed cost, like depreciation, remains constant. Now, however, if fixed costs were $10,000 and you produced 1,000 units, what is your fixed cost per unit? 10,000 would be $10, wouldn't it? But if you produced 5,000 units, what would be your fixed cost per unit? $2. Now, confusion. Fixed cost is fixed, but it varies per unit. It's fixed for all units. It don't matter how many units, okay? Now, this is where we get economics of scale and economics term. This is where Henry Ford got the assembly line. If he could produce more units with the same fixed cost, he was cutting down his cost per automobile. And that's what companies are doing. Have any of y'all ever heard of Telsa? Telsa? T-E-L-S-A? It's a car company.
Tesla.
Tesla?
Is it, what, how do you spell that?
Tesla.
Have you heard of Tesla?
Yes.
Have you? Okay, yeah. What are they making?
Electric cars.
What?
Self-driving cars.
They're making electric cars too, aren't they? And they're doing pretty good. Their stock's going up. I was looking at their truck, but they won't have it out probably till 2 more years. So, but who knows? They may make a good truck. All right, so variable cost versus fixed cost. And unit cost, it tells you it varies just like I showed you with the $5 or the $2 or the $1. Unit cost, $2 a unit, simply remains constant. But you already knew that. All right, cost reaction to change in activity. Variable cost is a straight line, isn't it? You know, if we produced so many units here, the cost is here. The more units we do, the more the cost is, of course, isn't it? And of course, fixed cost stays the same. It's a horizontal line. But now your unit cost is $2 a unit. It's a horizontal line. But your fixed cost per unit goes up. The less units, the more fixed cost per unit. You had enough of these graphs in economics, didn't you? Did you get something like that in economics, Jessica?
Yeah.
When I had to do orals for a graduate degree, and the professor asked a question, I had to connect 16 graphs together. Uh, I'll never forget that. So I got pretty good at economics. I miss teaching economics. All right, determining cost behavior. Activity accomplished by consistent observable changes in a cost item. The cost driver activity has a direct cause-effect relationship on cost. Now, these are not going to make sense till we look at them. Okay, this terminology is not making sense. We do know what unexpired and expired is. Name me an unexpired cost on the balance sheet. Prepaid rent. I mean, wait a minute. Prepaid rent, yes, prepaid rent. Your prepaid items are unexpired costs. Expired, IRS is not going to let you take the expense unless it's expired, are they? So your expired's on the income statement. Product cost, prime cost, and conversion. Okay, now let me tell you what prime costs are. Prime cost is, well, they've got it here, materials and labor. Conversion cost is labor and overhead. Which one do they have in common?
Direct labor.
They both have direct labor in common, don't they? All right, product costs are unexpired before sale. Product costs are expired when sold. Period costs, expenses, and period incurred. All right, now a period cost in manufacturing accounting is usually selling and administrative costs. That's period cost. But now manufacturing cost is your product cost, materials, labor, and overhead. But manufacturing cost, depreciation on the factory building is a manufacturing cost. But depreciation on the home office is a selling administrative, isn't it? So here are the three. Now let's think about, let's build a boat. Say, name me a direct material that goes into building a boat.
Wood. Wood.
Wood. Okay. Or if they didn't use wood, what would they use?
Metal.
They could use metal, but if they didn't use wood or metal, what would they use in some boats? Fiberglass. Okay. Okay, Alexander, give me another direct material in a boat.
Sail.
The what?
The canvas or whatever to make the sail.
Well, yeah, if it were a sailboat, okay. If it were a yacht, you wouldn't need that.
Engine.
What else direct materials for a boat?
Rivets and stuff.
What?
Rivets and stuff. Like screws.
Rivets, screws, you know, small parts, small items. What else, William?
Engine. Engine.
Right, you may have to have an engine if it's a motorboat. Now, if it's just a little sailboat, now if it's just a little pedal boat, you may just have wood. Wood, that's the only material for a little pedal boat. That you want to pedal out on the lake and do a little fishing. But if you got a yacht, or if you got a motorboat or a ski boat, you're going to have an engine. And with an engine comes some electronics, electric parts. And then you got some seating. You may have leather or plastic for your seats, plus wood, maybe plus foam. So you can see the different materials going into making a boat, from just wood to a little rowboat up to so many direct materials for a yacht. All right, a yacht may even have a kitchen built in. You have to put all those even appliances. Okay, now what would be the direct labor in building any of these boats? Whether it be a sailboat, a yacht, or a little rowboat, or a canoe? What would be some of your direct labor?
The people on the assembly lines and stuff.
If it were assembly line, with some of the parts, the motors and things have to be made on assembly line. A yacht, I don't know, if they got assembly line for a yacht or not. I'm sure they do for certain canoes and kayaks and things that's sold in bulk at Walmart's and Sam's and Cabela's and Bass Pro. But anyway, the person directly working on that product. Now, the overhead and making that boat, what would be some of the overhead?
Like provided lunches for the workers.
What?
Provided lunches for the workers.
Well, if you need to work with lunch,
The electricity.
the electricity would be overhead. The foreman or the superintendent, they would be overhead. Bosses don't work on the product. Just like I told you on the highway. The labor is the person on the dozer or with the shovel actually working to make that pavement. Or the truck driver dumping the gravel, the asphalt. The indirect labor is the flag people. And the flag people, the supervisors, surveyors, the engineers. Does anybody go across the hill here? When you pass the hospital, you pass what used to be a coffee shop on the corner. And you keep going, then you cross the road, I guess it goes down to the malls. And you go up that hill. What's that called? Wayneman? I've come across there more, I don't even notice the name of it. But it goes out on the 4 lane. Anybody cross that? Well, yesterday evening and this morning I got held up. They got one fella up in a boom truck cutting trees, people. But they got 10 standing down here on the ground. Those 10 standing on the ground have nothing to do with cutting that tree. One person up there, they got flag people on both ends. I guess they got foremen. I don't know what, but too many people standing around, which would be overhead. All right. Now, here, they have this little circle filled in. Do you know why? The little square filled in. Do you know why? Because it goes down here. And, or here, raw materials can be an inventory on the balance sheet. That's all it's saying. Now, period costs, and they tell you, is your selling administrative cost and your distribution cost. Distribution also has selling functions to it. Cost to warehouse, transport, and deliver. All right? And of course, distribution cost has a lot to do with management decision making. You don't want to warehouse something too long, you're tying your money up in it. Transportation, delivery. Now, why did car companies locate in the Detroit area? Transportation, the Great Lakes and the waterways and airports. They had interstate highways. Now, Bluefield does not have an interstate highway running through it, does it? You got a wild way out here somewhere, 77. Bluefield does not have a Great Lake, not even a Great River, does it, for transportation. Now, when you get up to Charleston, there's a lot of transportation on that river. Is that the Ohio River? Charleston, West Virginia?
Allegheny,
I don't know, is it?
I think so.
But there's some transportation on that river, barges and so on. So transportation has a major impact on decision making and your delivery cost. See, I wonder why, I know why gasoline is 10 cents cheaper on the Virginia side than it is West Virginia, because of taxes. West Virginia has more tax. But now I can't understand the same thing in Virginia. If I can go 10 miles down the road and they're selling gasoline 10 cents cheaper than 10 miles up the road. So I know in some counties it's transportation expenses. Buchanan County from Tazewell County, gasoline is 10 or 15 cents higher. Because they're transporting it farther. All right. Conversion process. You got raw materials and supplies. Your output is a product. And we know that input is materials and labor. Degree of conversion. I'm not going to worry about these right now. Department stores don't have to convert anything, hardly. They just buy and sell it, don't they? Now, a meat department at a grocery store, they may have to convert a big chunk of beef in the freezer to steaks or ground meat. So that's moderate conversion. But we know in a factory, in agriculture and mining, printing, and even audit, it's high conversion cost. But we're talking about manufacturing. And you can convert some of the manufacturing ideals definitely to construction. Now you can convert some of the ideals definitely to mining. Service companies, input, they don't have much conversion cost. A retail company, they purchase the products, warehouse and sale. But a manufacturing company purchases raw materials. All right, they purchase raw materials, and somewhere in between here is unfinished products. Then they go to finished products. All right. Now let's look at this. This is a little cost flow. Now, for the first box up there, Jessica, I'm gonna pick on you for that one. When you bought materials, what would you debit?
You would debit inventory or raw materials.
Yeah, raw materials inventory, credit what?
Cash.
Cash or accounts payable. Now, when you send that material, the supervisor on the assembly line wants some of your materials. They're in the warehouse. We debit work in process and credit what?
Raw materials.
Raw materials. Now, when it's finished, we debit what?
Finished goods.
And credit.
Work in process.
And now when we sell it, we debit
Cost of goods sold.
and credit
Finished goods.
inventory. And we debit accounts receivable, credit sales. 2 entries here. Right, 2 entries here, 1 entry here, 1 entry here, 1 entry here. But you do the same thing for labor. You take labor, put it in work in process, and you take overhead, put it in work in process, and that's all the journal entries. There's very few journal entries in cost accounting. They're easy to learn, just by this flow. Now they're trying to tell you that materials inventory, 1, work in process inventory, 2, and finished goods inventory, 3. That you've got 3 inventories on the balance sheet, right? Whereas in a retail business, how many inventories do you have on the balance sheet? One. In a service business, how many inventories do you have on the balance sheet?
Maybe one.
Zero. Service business has no inventory. Okay? Alright, but a factory has three. Cost of goods sold is an expense that goes on the income statement. Alright? Product cost, we know, are these two, which we mentioned earlier today. Wages may include holiday and vacation pay. But now, you see labor in here, but you don't see taxes. Taxes on these wages is overhead, not direct labor. Now up here you don't see those minor things like electricity. That's a direct material, or maybe, well, electricity, or maybe even gasoline to run an engine would be overhead. Your product cost, materials, labor, and overhead. But here's one that's indirect because it's overhead, okay? Okay, so your direct materials is variable, depending on how many you use, how many units you produce. Labor is variable, but overhead can be any of the three. It's usually mixed, but you've got some fixed. Assign indirect cost to one or more cost objects. All you're doing is splitting it. Allocating overhead actual cost system. Allocating overhead actual versus normal. All right. Now, you may have gotten this in principles, Seth or William. Did we do a predetermined overhead rate in principles? We just have one or two chapters on managerial. We may or may not have. But now Alexandra Jessica has done the predetermined overhead rate in managerial. Okay. So they've got a leg up on you on this part. But it's easy to do that overhead rate. You know, if you build a house, you can get a quote on materials from Lowe's, Home Depot, or somewhere. You can get a quote on labor from a construction company. But overhead, even a construction company may have to have some kind of predetermined rate. He may charge so much overhead based on labor. Here's your journal entries. Jessica went over some of these, okay? We debit raw materials and credit accounts payable. We debit work in process and credit raw materials. Now, here we debit work in process and credit overhead, but those are predetermined rates, both of them. Predetermined rates. And then we credit salaries payable. That's putting wages in. Now here we debit variable overhead. We do this a little bit different now than we did in managerial. We debit our variable overhead and we debit our fixed overhead control, and we credit utilities, salaries, accumulated depreciation. But then over here, going back a slide, we will credit that overhead control. All right? Or debit overhead control. And when we take that overhead control account and make it zero balance, we put it in to work in process. So now work in process has all three costs. And then we sell it. I mean, we put it in finished goods. And then we sell it. Okay? That's your basic journal entries in this chapter. Or in cost accounting or managerial accounting. You'll have a few variations, but not much. So, man, in accounting principles, you had to learn journal entries for everything. And then you got to corporations and had to learn a lot of journal entries for corporations. And chapter on payroll, you had to learn a lot of journal entries for payroll. Then chapter on bonds, you had to learn a lot of entries for bonds. So here, there's very few. Okay, now this statement, you got to start out with materials. Okay, now abbreviating, you take beginning inventory for materials, you add purchases, and you get materials available. You subtract ending inventory, and you get materials used. Now, this semester I didn't cover periodic inventory too well in principles. Now, perpetual, you didn't have to do this. But in periodic, even in principles, you had to take beginning inventory plus purchase. That gave you merchandise available minus ending inventory, gave you cost of merchandise sold. But here, this is cost of materials used. You will need that formula. Not a formula, you'll need that procedure. Accounting is more procedure than anything. All right, now we will take this chapter and we'll do our materials. Then we will do our labor. Then we will do all of our overhead. And we've got current period manufacturing costs. Now, if you have no beginning and no ending inventory, that's your answer. 934,000 is your answer. But here we got beginning inventory and ending inventory, and we want to get cost of goods manufactured. Now you got the same deal this semester as you had in, what did I do, Jessica, in managerial accounting on this statement? It's on your first test. If you don't get it right, it'll be on your second test. And if you get it right on the first test, you don't even have to work the problem on the second test. But you got 2 or 3 shots on tests to get this statement. It is.
Just go ahead and memorize it now. It's easier for the first test.
Did you memorize it?
Yeah.
It's a statement of cost of goods manufactured, which I don't think managerial called it a statement. They may have called it something else.
No, it was statement of cost of goods.
Yeah, it's the same thing though. Statement of cost of goods manufactured. And it has your materials. It has your materials, your labor, and your overhead on it. But now, for materials, to find that 248,000, you may have to do this part. And you can make that a separate part of your statement or a part of it, but it has to be found. Materials of 284 has to be found. Now here's cost of goods sold. This goes on your balance sheet, doesn't it? Income statement. You take your beginning finished goods plus manufacturing cost minus your ending finished goods, and you got cost of goods sold, just like you would have in principles if it were a merchandise business. But in principles, you'd have beginning plus purchases minus ending to give you cost of goods sold. So this is the income statement. Okay? This is a statement all by itself. Now, your three main statements that you've been dealing with in principles and intermediate, even if you were advanced accounting, your three main statements is balance sheet, income statement. Now, in principles, in a proprietorship, it is your capital statement. But in a corporation, it's stockholders' equity section. And in a corporation with that stockholders' equity, you have to do a retained earnings statement. Okay? So, but you got three main statements. Balance sheet, income statement, and let's say stockholders' equity or capital. But we're adding the fourth one here, which is statement of cost of goods manufactured. It is not a public statement. It does not have to go by generally accepted accounting principles. It's only for the internal part of this company. It's not for stockholders. Then, of course, our income statement is like it always has been. Revenue minus cost of goods sold minus operating expenses gives us operating income. Now, in intermediate, Jessica, have you expanded back in intermediate one? Did you go way beyond operating income? No, I'm talking about, not talking about other income, other expenses, interest expense or dividend income. Did you go into extraordinary gains and losses on the income statement?
A little bit.
So you expanded that operating income a little bit. Okay, good.
Like, income from discontinued operations and all of that.
Continued, discontinued operations, what have you. All right. Think about it. What are these three? What are the three? Anybody? What are the three?
Direct materials, direct labor, and overhead.
All right. What are the three inventory accounts?
Raw materials.
Work in process and there's goods.
All right. And what is the difference between a fixed and a variable cost?
Variable costs depend on something else.
Variable depends on how many units produced. Fixed is the same no matter how many units you produce. Okay. Ethical issues. Don't overstate labor. Don't overstate inventory. And keep these honest. Now, Enron, one of the major corporations in the United States, they went down because they didn't keep things honest. They were putting, let's say, 1 million barrels of oil on their books as an asset. But those 1 million barrels were empty. They weren't full of oil. And I suppose that's the end of the chapter, folks. All right. So now if you don't have a book, only one book back there. So we're going to have to use my book. In chapter 2. Now, if you have a book, I guess, that would just be Alexandra. Turn it to page, I'll tell you in a minute. trying to find an exercise that I could get you to do without a book. Some of these we can do when everybody has their books. Well, let's, for the time being, do number 23 here. That is so easy. It's so easy. Number 23, let me try to blow that up for you so you can read it. I have to learn to move my book and my. Well, now I think we can read it. Indicate whether each of the following is a manufacturing, retailing, or service business. There can be more than one correct answer for each term. There can be. Indicate whether each of the following is for a manufacturing company, a retailing, or a service. Take a minute and just look over those. All right, now depreciation on factory equipment can only be one. Which one? Prepaid rent can be all three. Auction fee expense, all three. Merchandise inventory, just retail. Sales salary expense, all three. Finished goods inventory, just factory. Cost of services rendered, just service. Cost of goods sold, manufacturing, or merchandise. Direct labor, only manufacturing. Okay? So that was easy enough. I wanted to find materials, labor, and overhead classification, but I can't find those too easy. I can't find what I want there. Let's see. And there's product classification. Okay, let you do this little exercise. Number 25. If I get my book coordinated with my Almo here. Gosh. It's hard to do since I got it blown up. There's the problem I want you to see. All right, look at the materials cost. And here's your questions. Very easy questions. If I can get that to stay there. What is your direct material cost and what is your direct labor cost? Remember, direct. So add those up. See what up here, total up what you think is direct materials and total up what you think is direct labor. raw materials, which one are you leaving out?
Janitorial supplies.
Exactly, that is incorrect. I think chrome rivets to assemble the canoe is part of the canoe. The sealant is part of the canoe, and the aluminum. If it's part of the canoe, it is direct material. Janitorial supplies is not part of the canoe, right? Okay, now who here worked on the canoe?
Welders and cutters.
The janitor didn't work on it, did he? The cutters did. Did the salespeople work on it?
No.
Did the superintendent work on it?
No.
So it'd only be welders and cutters, wouldn't it? Okay, I think you got a handle on direct materials and a handle on direct labor. On this little problem here, problem 32, if I can get it to show up. All right, you've got materials August. Let's see. Can we do, oh, we could have done, I don't even think you can find the cost of materials used here, they give it to you. All right, here's a question for you. You've got beginning inventory, right? You've got ending inventory, right? And you've got cost of materials used, right? Here's my question. How much material did we purchase? How much material did we purchase? All right, take my little format. Here's what I would like you to do. If you take my format, what did I do? Huh. I can't do what I wanted to do because I was on a different. Take my beginning inventory plus purchases minus ending inventory gives you cost of materials used. Use that formula and find me how much purchases. We got an answer yet? What you got, Alexander?
I got 638,000.
Bell's got 638. Well, I was just looking at it there without working her answer, and I thought, well, if the ending inventory is bigger than the beginning inventory, we must have used 612 plus the difference. So I took the difference here of 26 and added it to the 612. But if you put it in my format, you can just plug it in, okay? But now if this was a reverse, if 84 was beginning and 58 at the end, you'd have to subtract the 26 from the 612. Okay, now